Yeah, a very good morning, my dear friends. Wonderful, lovely answer. So, guys, we are done with the discussion about the beautiful concept of composition scheme, but in that we still have some more interesting points to talk, which we'll complete now, and we'll also start a new topic for discussion. Are we ready? Speak out. Excellent. Then tell me, my dear friends, what is the answer for section 7? Supply. What is schedule 1? Schedule 1 is what? Transactions regarded as supply even though there is no consideration. Schedule 2. Bifurcation between goods and services. Schedule 3. Transactions which are neither supply of goods nor supply of services. That is dealt by schedule 3. Friends, speak out. Excellent. And what is the definition for composite supply? Two or more taxable supplies are naturally bundled, and one of which is a principal supply. Mixed supply, how do we tax? Highest rate. Composite supply? Composite supply is taxable at the rate of principal supply, whereas mixed supply is taxable at highest rate. Are we clear with this concept? Everybody? Do we all remember this concept? Good. Then, my dear friends, we started discussion about section 10 composition scheme, where we discussed that it is applicable only to those persons whose aggregate turnover during preceding financial year does not exceed. Exactly. And in case of special states, it is only 75 lakhs. Correct? And as such, section 10(1) composition scheme is applicable only to 3 categories of persons: manufacturers, trader, restaurant and catering service provider. Manufacturer, what is the rate of GST? 0.5% plus 0.5% of turnover. Trader, 0.5% plus 0.5% of taxable turnover. That's one big difference between manufacturer and trader. Restaurant and catering service provider, 2.5% plus 2.5%. Are we clear with that? Everybody? Good, fantastic. Come on. So then what else we discussed there? That a person engaged in intrastate outward supply, he cannot engage in composition scheme. So remember this? We discussed this point. Somebody who does intrastate outward, they can't take composition scheme. And manufacturer of some goods also cannot take composition scheme. What are those some goods? Tobacco and tobacco substitutes, ice cream and other edible ice, then whether or not containing cocoa, then what else? Aerated waters, nothing but cool drinks. Sir, are we clear with this point, everybody? Friends? Good. Then, my dear friends, 2 last special points in this composition scheme. Let's complete that also. Friends, a composition registered person, will he pay tax on monthly basis or quarterly basis? We discussed very clearly that he will pay tax only on quarterly basis. He will not pay tax on monthly basis. He will clearly pay tax on quarterly basis. Correct, friends? And can composition person issue invoice? Can he collect tax from customer? Can he claim input tax credit? For everything it is no only. But still people are taking because of the best point called pay tax quarterly, not on monthly. Correct, friends? Everybody? And I already told you, we discussed an important point that there are 2 ways how you can take composition scheme. Number 1, you can convert from normal to composition, or starting only you can take composition. If you are converting, you have to apply before start of financial year. So remember that? Now listen to an interesting concept. Listen carefully, guys. Composition scheme. So there are 2 things here. Composition to normal, normal to composition. Possible, sir? Friends, please speak out. We may convert from composition to normal, or we may convert from normal to composition. Which one do you think government is happy? Composition to? Obviously, somebody used to see us quarterly once will now see us monthly. No doubt about it. Clear? Now listen. Composition to normal we can convert any time during the year. Come on friends, what is our point? Composition to normal, we can convert any time during the year. And this only before start of what, sir? Financial year. So are we understanding, everybody? Come on, composition normal when, sir? We can convert any time during previous year. Normal to composition? Exactly. Are we getting clarity on this point? Everybody. And for this we have got one form called CMP02. And for this we have got a form called CMP04 to withdraw from composition. Otherwise convert from composition to normal. Friends, getting clarity, everybody? Sir. So friends, what are the two cases we are talking? Composition to normal, normal to composition. Composition to normal we can convert when, sir? Any time during the year. Normal to composition? Only before start of financial year. Are we getting clarity on this point, everybody? Friends, now listen to an interesting concept. If we convert from composition to normal, I repeat once again friends, listen very clearly. If we convert from composition to normal, government is happy because so far he was paying tax at quarterly basis, now we'll start paying tax at monthly basis. That too not small percentage, he will start paying at normal percentage. Correct, no? But can he claim input tax credit? After converting from composition to normal, can he take credit? Speak out. So government is happy when you convert from composition to normal, yes or no, sir? So they told, you can claim. You can claim. What you can claim? ITC on, listen, inputs held in stock. ITC on inputs held in stock, inputs contained in semi-finished or finished goods in stock. What is that line, sir? ITC on inputs held in stock, inputs contained in semi-finished or finished goods in stock. Otherwise, simple common sense answer, my dear friends. Imagine I'm a dealer in laptops. Dealer in what, sir? Laptops. I was under composition scheme. So I was paying tax only at the rate of 0.5% plus 0.5%. Now on fine day I got up and told I'm converting from composition to normal. Government is telling, wow, welcome. They are very happy because you're converting from composition to normal. Because now you will start paying tax on monthly basis. Now whatever stock is there with you, on that stock, after converting to normal, will you pay 0.5 plus 0.5? You will pay normal tax only, no? Then law told, since you are paying normal tax, whatever stock is there, on that whatever tax you paid, please take what, sir? ITC. Correct only, no? Government is happy, right? And they also told, plus, you can also take ITC on capital goods. Friends, CG means capital goods. ITC on capital goods. But that is reduced by 5% per quarter or part thereof. The logic of that 5% per quarter is because under GST law we believe that useful life of any capital good is 5 years. I repeat, my dear friends, under GST law we believe that useful life of any capital good is 5 years. Since we believe that useful life is 5 years, simple logic, 5% per quarter means 4 quarters in a year, 20%. Into 5 years, 100%. Correct, no? Friends, let's take a small example like this. Imagine, I purchase one capital good for 1 lakh rupees. I repeat, for what value? 1 lakh. On that GST rate is 18%, which is 18,000. Okay, friends? For span of 6 months, I was under a composition scheme. And the moment we say that I am under a composition scheme, I cannot take input tax credit. And after 6 months, I shifted from composition scheme to normal. Then law is telling whatever stock is there, take credit. And also that machine what you purchased, on which you paid 18,000, you did not take credit because you are in composition. But now you are shifting to normal, no? What you do is 18,000 minus 5% per quarter for 2 quarters because 6 months gone. Sir, 5% per quarter for 2 quarters means 10%. 18,000, 10% is 1,800. Balance is 16,200. That you claim it as credit. Clear, friends? This question came in exam. How much credit can be claimed? But one very, 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 very important point which is to be noted is that stock should not be older than 1 year. So other words, what I'm trying to tell you is that the credit what we want to claim on that inputs or capital goods or that stock, on that stock we want to claim credit? No sir. Friends, on the stock do you want to claim credit or not? That stock should not be older than 1 year. If it is more than 1 year old stock, then you can't claim credit. That's the point. Stock should not be older than 1 year. Exactly. Are we understand this point, everybody? Friends, please speak out. Excellent. Very, very important concept. Now listen, hold on. Wait 2 minutes. Then you write. Listen. Friends, we are doing a reverse story now. What is the reverse story? Normal to? Government is happy or angry? Happy or sad? Very disappointed. Because so far you are paying tax on monthly basis, normal tax, credit, all that we were talking. One fine day you are getting up and telling, from next year we will go to composition. Small percentage only will pay. We don't want credit also. We will not give invoice also. Clear, friends? Then law told, please pay. Please pay and then get out. What you will pay? ITC on inputs, stock. Inputs contained in semi-finished or finished goods in stock. So getting clarity, everybody? Sir, there they told claim credit, but here they are telling pay that amount. Logic of this point? What is the logic of this point? When you come into normal, you will start paying tax at normal rate. That's why law told, please take credit, enjoy. But when you convert from normal to composition, government is extremely sad because no more you are eligible to take credit. So whatever stock is there, please pay tax, then get out. Wonderful. Concentrate. So what are we talking about? Normal to composition. Plus, this point is more dangerous. ITC on capital goods proportionate to remaining useful life. ITC on capital goods proportionate to remaining useful life in months by taking 5 years. By taking what, sir? 5 years. Let's take an example to understand this better. So let's say one person, Mr. A, he was under normal scheme. Okay, guys? One fine day, he converted to what scheme, sir? Composition scheme. So can we convert like that? Yes, but we can't convert middle of the year. We have to convert before start of the financial year. And at that time, my dear friends, he already had one capital good which he purchased for 10 lakhs, GST at the rate of 18%, 1.8 lakhs, enjoyed input tax credit already. Enjoyed credit. Why enjoyed credit? Because it was under. Next. After 10 months. After how many months, sir? What he has done? Conversion. Then what he has to pay is, my dear friends, how much credit you enjoyed? 1.8 lakhs into 50 divided by 60 months. Why 50 by 60? Because useful life is 5 years, which is nothing but 60 months. How many months already over? 10. Remaining useful life is 50 months. So getting clarity? Sir, the line chadavandi sir clear ga. Please read the line properly. ITC on what goods? Proportionate to remaining useful life in months. What is the remaining useful life? 50 months. Correct, no? So 1.8 lakhs into 50 months divided by 60 months, which comes out to 1.5 lakhs. This you should not claim. You should pay. You should pay. Don't feel happy. Sad. Now don't be sad. It's okay. So getting clarity? This figure is not something what you can claim. This figure is something what you have to pay. Friends, are we understanding? Speak out. And let me tell you, this concept of composition to normal, what we just discussed, is given by section 18.1c. Normal to composition is given by 18.4. Section 18.4, this section 18.1c. Are we understanding, sir? So special points in composition, that's what you have to understand. Normal 0.5, 0.5, 1, all that everybody will tell. Special point is important, no? Are we clear? Come on, please take the summary. Are we done? Sir, done? Take this example also, please. So are we done? So if we convert from composition to normal on whatever stock is there, can we claim credit, sir? If we convert from composition to normal, whatever stock is there, can we claim credit? Speak out. Exactly. Then if we convert from normal to composition, what will happen? Whatever stock is there on that, please pay the tax. And write one small question. Mr. A, a registered person, under GST, registered person under GST, under normal scheme, has converted into composition scheme. Full stop. At the time of conversion, he has the following stock. He converted from where to where? He has the following stock. Clear? Number 1. Inputs value 6 lakhs. Inputs value 6 lakhs. GST already availed. 12%. GST already availed. How much, sir? 12%. Next point. A machine. Second point. A machine. Capital good, sir. A machine which was purchased 25 months ago, for 10 lakhs plus GST at 12%. Compute amount payable. Clear? Second question. Mr. X, a registered person under a composition scheme, Mr. X, a registered person under what scheme, sir? Composition scheme, has converted to normal. On 1/1/22. 1/1, full stop. At that time, he had following stock. Number 1. Inputs purchased on 10/10/2020. Inputs purchased on 10/10/2020 for 5 lakhs. For 5 lakhs plus GST at 18%. For 5 lakhs plus GST at 18%. Number two. Inputs purchased on 10/6/21. 10/6/21 for 8 lakhs plus GST at 12%. 8 lakhs plus GST at 12%. Third, machine purchased on when did he convert? 22, no? A machine purchased on 1/5/21. 1/5/21 for 7 lakhs plus GST at 18%. Compute the ITC that can be claimed. Two minutes time, get me the answer. Last 1 minute. Come on guys, are we done? Speak out. Tell me first question, what is the answer? What is the first figure? Inputs figure? 70? Should we pay this? Yes, this is for inputs. For capital goods? Working. 1,20,000. 35 divided by 60. 70,000. So what we have to pay is 1,42,000. Clear, no? Like this question can come in exam for 2 to 4 marks. 2 marks, not more than that. Clear? Then second question. Second question was claiming credit. Correct, no? First point, how much credit? First point, 0. Why? Stock is older than 1 year. If you forget that point, forget June or December. So please don't forget the point. Second point. $96,000. Correct, no? Third point. 7 lakhs GST at what rate? 18%. Correct, no? So what is the figure? 1 lakh minus 5% per quarter for 5% per quarter only, no? How many quarters will come? Speak out. Sir, from May, no sir. May means May will come under April, May, June quarter. July, August, September, October, November, December. 3 quarters. Speak out. Sir, yes or no? How much? 15% gone. 1 lakh? 7,000? Total. That's it. Looks like many people got first answer correct, but second answer gone. So when I say 5% per quarter, what is the definition of quarter, sir? What does quarter mean? Sir, they clearly, no. Sir, there is a reason why I am asking that question. Sir, not joke, not time pass. In exam one time, question came like this. One time question came in exam like this, sir. Listen. 10th June we purchased. Okay? 10th June we purchased. 15th July we converted to normal. July converted to what, sir? Normal. How many quarters? Speak out. 1. Nonsense answer. Answer is 2 quarters. Because 10th June will come under April, May, June quarter. 15 July will come under July, August, September quarter. This exam lo vachindi question. So quarter ante joke gaadu. Quarter is very important. I mean, understanding this word, quarter is very important. they clearly clarified that quarter means a period of 3 months ending with June, September, December, March. But our brain will tell June to July, 1 month, 1 quarter. ICI is telling 6 months. CMA Institute. Correct, no? If you do something wrong in quarter, so are we done? Friends, come on, please reply. Chalo. One last concept to talk in the composition scheme so that we can happily complete this. Are we ready, sir? Excellent. So we discussed already that composition scheme under section 10.1 is applicable only to 3 categories of persons. Who are 3 categories of persons? Manufacturer, trader, and restaurant and catering service provider. Only for these 3 category of persons this concept of composition scheme is applicable. Correct, friends? Speak out. But for other service providers, for whom, sir? For other service providers, we have got one fantastic scheme known as section 10.2 capital A. 10.2A. 10.2A, which talks about the people whose aggregate turnover. Even Shivatej also can take this. Any service provider can take this, provided aggregate turnover during preceding financial year does not exceed 50 lakhs. And simple point, let me tell you, this is applicable to those who are unable to take composition scheme under section 1. Correct, friends? So those who are unable to take composition under section 10.1, I repeat, my dear friends, those who are unable to take composition scheme, one more time I repeat, those who are unable to take composition scheme under section 10.1, they can take under section 10.2A. Friends, are we understanding? I repeat once again, my dear friends, those who are unable to take, one more time I repeat, those who are unable to take composition scheme under section 10.1, they can take under 10.2A. But 10.2A condition is that aggregate turnover during preceding financial year does not exceed? Exactly, that's a precondition. Friends, are we understanding? Everybody, sir? Right. In that case, current year up to 50 lakhs. Current up to what value, sir? they can pay tax only at the rate of manufacturer, remember 0.5 plus 0.5, trader 0.5 plus 0.5, restaurant 2.5 plus 2.5, other service provider has 3% plus 3% of turnover, of course. 3% plus 3% of turnover. Friends, are we understanding? Everybody please speak out. So for a manufacturer, what is the rate? 0.5% plus 0.5% of turnover. Trader 0.5% plus 0.5% of turnover. Taxable turnover. Restaurant and catering 2.5 plus 2.5 of turnover. Here it is again 3% plus 3% of what? Turnover. And the same points will apply. Somebody is doing interstate outward, you can't take composition. Sir, remember that point, no? Same point will apply here also. Are we understanding? Everybody? Now I will ask you one question. Think properly and tell me, sir. One person, Mr. X, a chartered accountant or a cost accountant, whatever you want to put. 2021 turnover is 14 lakhs. How much is the figure? And he was unregistered person that time. He was what person? Because general registration required only when you cross 20 lakhs. He did not take registration. 21-22 on 10th July 21 he has taken registration. He has taken what, sir? Registration. After crossing 20 lakhs. 10th July, on 10th July, he crossed how much, sir? 20 lakhs. And he has taken what? Registration. And this registration he has taken under section 10(2)(a). This registration he has taken under which section, sir? 10(2)(a). Sir, getting clarity? Speak out. This registration he has taken under section 10(2)(a). And what has happened is, total turnover for 21-22 became 45 lakhs. So this question came in exam. How much figure? 45 lakhs. You will pay tax at the rate of what percent? On what is the figure? How much? Speak out. This question came in exam. Answer is 25 lakhs. Because the reason is very simple. First 20 lakhs, you are not liable to be registered. When you are not liable to be registered, there is no question of paying tax. So, other words, from first day of April, from which date, sir? First day of April. I repeat, my dear friends, from first day of April till the date you are not liable to be registered. Whatever turnover you do, on that you need not pay any tax. Getting clarity? Because the story of paying tax will start only after you cross 20 lakhs. Are we understanding this concept, everybody? Speak out. Something interesting and important, please. Check it. Survey done. Chalo, finally last put side heading points to be noted. Few small points. Yeah, sir. Wonderful, good question. Sir, what if, imagine a small case like this only, total turnover is 45 lakhs we discussed, no? Instead of 45 lakhs, imagine it became 55 lakhs. That's your doubt, right? Then what will happen is 20 lakhs, tax is 0. 30 lakhs, tax at 3% plus, and the last 5 lakhs, normal rate. Because once you cross 50 lakhs, you can't stay in composition. Got it, sir? There is no ITC. And once you convert from composition normal, same concept already we learned, no? ITC on input sold in stock plus capital goods proportionate to, ITC capital goods 5% per quarter part thereof. Same story. No change. Yeah, what did I say? Points to be noted. Right, first point. Composition registered person. Composition registered person cannot issue tax invoice. Composition registered person cannot issue tax invoice. Instead, he shall issue bill of supply. Instead, he shall issue what, sir? Bill of supply. Sir, getting clarity? Next point. Composition registered person should mention that he is a composition taxable person. Should mention that he is a composition taxable person on the invoice. Should mention that he is a composition taxable person on the what, sir? Invoice. Sorry, on the bill of supply. Change that word to bill of supply. On the bill of supply. Finally, last point. He has to display at his place of business. He has to display at his place of business that he is a composition taxable person not eligible to collect tax on supplies. He is a composition taxable person not eligible to collect tax on supplies. That's it. So these are the various interesting points what we have got under what scheme, sir? Composition scheme. High possibility one question will come in the exam. No doubt about it. Are we clear, everybody? Can we answer in the exam if it comes? Full clarity is there. So section 10.1, how many category of persons are there? What are the three categories? Manufacturer, trader, restaurant and catering service provider. Manufacturer, what is the rate? 0.5% plus 0.5%. Trader, of taxable turnover. That's an important point. Restaurant and catering service of turnover. Correct, no friends? 10 to A, what is the rate? 3% plus 3%. But here the important point is this section is applicable only to those persons whose aggregate turnover in the preceding financial year does not exceed. Then current up to 50 lakhs, you will pay tax at the rate of 3% plus 3%. And I hope we got clarity on the concept of composition to normal, normal to composition. Are we clear with that? Everybody? Good. Next. Can we proceed? Friends, please speak out. So without delay, today let's start discussion about a very small, interesting topic, but almost every time question is coming in the exam. And I'm sure you would have heard some concepts before also. That is a beautiful topic known as, it's a wonderful time to discuss time of supply. Any idea about this? What is the importance of time of supply? Students are telling, sir, we only told we have idea. Sir, in general, the due date to pay tax is equal to 20th of next month. That is when we practically file one return called GSTR 3B, which is summary return. And the due date for paying tax is 20th of next month. That is the general answer always. So clear, friends? Everybody? So what is the due date in general? 20th of? Exactly. So speak out. Now here, when I say that the due date is 20th of next month, some interesting concept to be noted here is something like this. So let's say, Shivateja, there is one client. I have given service on 10/10/21. When did I give? Then I gave him invoice on 5/11/21. 5/11? Client made payment on 6/12/21. So forget date, tell me month. Which month I gave service? 10th month, overaction. Tell me, sir, which month I gave service? October. Which month I gave invoice? November. Which month I got payment? First fundamental point. Should I pay GST to the government? Should I pay GST to the government? Question is now, when should I pay? The answer can be 20th of November, 20th of December, or 20th of Jan. Correct? No. These are the only three possibilities. No, sir. It can be 20th of November. If we consider October date, it is 20th November. If I consider November date, 20th December. If I consider December date, 20th of. Now question is all about what to be considered. Question is all about, I repeat, question is all about what to be considered. And what to be considered is given by time of supply. So basically time of supply determines when the liability to pay tax arises. Friends, what is that line I just told? TOS determines the point in time when liability to pay tax arises. Come, what is that line, sir? TOS determines. Come, what does TOS determine? The point in time when liability to pay tax arises. Tell me, guys, according to you, what do you think is the answer? I already told it can be 20th November or 20th December or 20th Jan. What is your answer? 20th November. How many have said 20th November? Good. How many have said 20th December? Good. How many have said 20th Jan? Good. Balance February. Some are not raising hand for anything. Assam batch. We'll talk in detail. But the answer is 20th December. Why? We'll talk in detail. Because generally answer is date of invoice, date of payment, whichever is earlier. Some case service also is there. Which case what is there? We'll talk in detail. I hope you understood why we are learning this topic. Why we are learning this topic is basically to determine when the liability to pay tax arises. That's what we are trying to learn. Are we clear, friends? What is the topic name? Exactly. Take this. Come on, write down. So are we done? Good. So before I continue, just 1-2 more points I will add in composition scheme. Just write that points also, no? In points to be noted, we wrote 1-2 points. 3 points we wrote. Yeah, add one more extra point. If the proper officer, third point or fourth point, yeah, if proper officer identifies that a person has opted composition even though not eligible. Has opted composition even though what, sir? Not eligible. Then officer will issue show cause notice. Officer will issue show cause notice. You can write SCN. Officer will issue show cause notice. Full stop. After reply, officer may accept or reject. If rejected, full stop. If rejected, he will charge penalty. So one time a small question came in exam. Tell the answer for this. Mr. A is a registered person engaged in providing consultancy services in Uttar Pradesh. His turnover in the preceding financial year is 45 lakhs. Can he opt for composition scheme under section 10(1)? Answer is no. He cannot opt under 10(1), but he can opt under 10(2)(a). See the game how he played. He asked, can you take under 10(1)? Our brain will tell 50 lakhs not cross, no take. But that is not 10(1), that is 10(2)(a). He is playing with section number, correct. Small point, so what? Still powerful point. Are we clear with this point, everybody? Come on, let's get back. We're talking about which topic, sir? Time of supply. So what is the purpose of time of supply topic? Time of supply basically determines when the liability to pay tax arises. Clear, friends? And let me tell you, my dear friends, this topic of time of supply is dealt by section 12. Section 12 is time of supply in case of goods. 13 is time of supply in case of services. Value of supply. What is such a horrible answer here? 14 is time of supply for some are telling, sir, both. This is nonsense. Time of supply in case of change in rate of tax. Come on, friends. What is section 12 for? Time of supply in case of goods. 13 for time of supply in case of services. 14 for time of supply in case of change in rate of tax. Clear, friends? Let's complete 12 today. Yeah? 13, 14 we'll talk later, and we can also discuss a lot of questions on time of supply, and generally time of supply keeps coming in the exam. What are 3 sections involved? 12, 13, 14. What is section 12? Time of supply in case of goods. 13? 13 is time of supply in case of services. 14? 14 is time of supply in case of change in rate of tax. Are we clear with this? Everybody? Section 12. And in 12 we have got 12, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Like that you don't think. We only have 1, 2, 3, 4, 5, 6. 12, 1, basic point, it only says liability to pay shall be as per time of supply. Of course, we know that point. That is why we are trying to learn this. Correct, no, sir? Liability to pay tax shall be as per what? Time of supply. We know that. That's why we are trying to learn. Friends, next see. 12.2. General rule. Very, very important rule. First listen carefully, then we'll write down. Wait 2 minutes. Sir, let's say there is one car dealer. Which car? Audi car dealer. Huh? Audi car dealer. One person, Mr. A, he approached the Audi car showroom on 10th Jan 22. Booked car for 50 lakhs and paid advance of 5 lakhs. What he has done, my dear friends? He booked a car on 10 Jan 22 and he also paid what, sir? Advance of 5 lakhs. And Audi car dealer promised A that delivery will be done on 10th March. 10th March. Along with invoice. And Mr. A paid balance 45 lakhs on 10th March. Sir, I hope you got the question. What is the interesting question here? One customer, Mr. A, came to Audi car showroom and he booked one car for what value? 50 lakhs. And how much advance he paid? 5 lakhs. And that transaction happened, that story, all story happened on 10th Jan 22, where he paid 5 lakhs advance. And subsequently, delivery was done on 10th March. And on 10th March, Audi car fellow gave an invoice also for 50 lakh rupees. And Mr. A paid balance for 45 lakhs on 10th of March. When will the liability to pay tax arise? When should Audi fellow pay tax? Jan month or March month or both? Jan month or March month or both or what? 4 options. Option A. Entire GST to be paid for Jan month only. Option B. Entire GST to be paid in March month. Option C. On 5 lakhs Jan, on 45 lakhs March. Option D. No tax. What should I see? Option C. Wow. Come on, see my institute. Time is going. Come on, see my face. Don't see left and right. Only camera. Come on, tell me the answer. What is the answer? Option C. How many of you say option C? Only 2-3 hands. How many of you say option A? How many of you say option B? B. 1-2 people. Option C. 1-2 people. Option D. Nobody. Then what is your option then? Acha, attempt to postpone to December. Arey yaar, come on yaar. Some option should be there, no. Option E is not there. Only ABCD is there. Some are telling toss. If you do a toss, only heads and tails will be there. But here options are 4 options. 2 times you will do. How 2 times will work? It should be 3 times at least. A, B, 1 will come, B, again C, D, C will come, again B, C, B will come. And by the time you keep playing, June will become December, December will become June. Every time you toss in the air, attempt will change. 6 months gone. Finger toss, inky, pinky, ponky. Tell yaar, what is your answer? A or B or C or D? A. Entire 50 lakhs in Jan only. B. B. C. C. Some friends are giving reaction. C. C. D, no tax. A, B. A answer, madam. Wonderful. Good. Fantastic. Fantastic doesn't mean correct answer. Just like that I told. One second. Option B is the answer. Excellent. In exam, this question came, and majority students wrote answer as option C, telling 5 lakhs Jan, 45 lakhs March. But the answer is not correct, because as per section 12.2 general rule, they clearly clarified that in case of goods only we are talking, no? Section 12 is goods only, no sir? In case of goods, time of supply is always date of invoice. Advance is irrelevant. On advances, we do not pay GST in case of goods. In case of goods, I repeat once again, in case of goods, there is no requirement to pay GST on advances. In case of goods, there is no requirement to pay GST on advances. One more time I repeat, in case of goods, there is no requirement to pay GST on advances. Are we understanding, sir? Speak out. And what is the meaning of this word? Date of invoice. Date of invoice means they told actual date of invoice. That means actually when invoice is given. Actual date of invoice. Or last date when invoices ought to have been issued. Whichever is earlier. Come on, what is that line, sir? Actual date when invoice is issued. Actual date of invoice. Or when last date when invoice is ought to have been issued. What is ought to have been issued? ఎప్పుడు ఇవ్వాల్సింది, ఎప్పుడు ఇచ్చాం, ఎప్పుడు ఇవ్వాల్సింది. బోత్లో విచ్ ఎవర్ ఇస్ अर्लियर. कब दिए, कब देना चाहिए था, दोनों में से विच एवर इज अर्लियर. सर ఫ్రెండ్స్ అండర్స్టూడ్. ఎప్పుడు ఇచ్చామన్నది కాదన్నయ్య, ఎప్పుడు ఇవ్వాల్సింది, ఎప్పుడు ఇచ్చాం, రెండు. విచ్ ఎవర్ ఈస్ అర్లియర్. నౌ రీడ్ అవుట్ ఇన్ ఎగ్జామ్ ఇట్ గో అండ్ రైట్ దేర్ ఎప్పుడు వచ్చామనేది, దెన్ దే విల్ టెల్ ఇప్పుడు కాదు మళ్ళీ వచ్చాయి. సో ప్లీజ్, వాట్ ఈస్ ద ఆన్సర్ ఫర్ టైమ్ ఆఫ్ సప్లై? अरे first of all, time of supply answer is date of invoice. That you tell first. And date of invoice means what? Actual date of invoice or last date when invoice is ought to have been issued, whichever is earlier. Now big question is actual date of invoice we know eppudu iste appudu, but the question is all about when invoice is ought to have been issued. That is a question that will spend time, that will take some time. Are we clear? Understanding? Going in cerebellum, middle oblongata, somewhere any three, any one is also okay, but somewhere you put it. Okay friends, are we clear? Take it, took, taken, take. So done. So what is section 12.1? Liability to pay tax shall be as per time of supply. 12.2 is what rule? General rule, which says the answer is directly date of invoice. And date of invoice means what? Actual date of invoice or last date when invoice is ought to have been issued. Actual date of invoice or last date when invoice is ought to have been issued, whichever is earlier. Clear, my dear friends? Yeah? Now let's talk about when invoice is ought to have been issued. When invoice is ought to have been issued. Clear, my dear friends? This concept is given by section 31. Which section? 31. Which clearly says that in case where there is a movement of goods, in case where there is a, that means there is a physical movement of goods. Physical movement of goods. In case where there is a movement of goods on or before the date of removal. On or before the date of what, sir? So when they are removed, at that time invoice must be accompanied by that. Invoice must go along with the goods. On or before the date of what, sir? Removal. And in case where there is no movement of goods, invoice must be issued. No movement of goods. Example, I sold you some furniture at some place and that is not being physically given to you. You are going there and occupying the furniture without any physical movement. Without any physical movement. Then on or before date of delivery, or they also call it as make available. Make what, sir? That goods are made available to you. On or before date of delivery or make available. Friends, getting clarity? Now listen. Some special points. Number 1. In case of continuous supply of goods under contract. So generally what happens is some dealers, they'll sign a contract telling that whenever you ask, we'll supply. Weekly once, daily once, or 15 days once, we'll settle the bills. For example, sir, if I'm a cement dealer, I will sign one contract with a construction company. Whenever they ask, I'll keep on supplying cement bags. Understanding? Speak out, everybody. Come on. In case of continuous supply of goods under what, sir? Contract. Huh? Invoice must be issued when statement is issued. When what is issued, sir? Statement is issued. Or statement is issued or payment is received. Whichever is earlier. Whichever is what, sir? Finally, last special point. Listen carefully. In case goods are sent on approval basis. Friends, heard this word, sale on approval basis? We are sending goods, but sale will actually happen only when the other person approves. When it is approved, or 6 months from date of removal. Friends, getting clarity? These are the points in terms of when invoice is ought to have been issued. And why this is important? Because time of supply clearly says the actual date of invoice. I repeat, time of supply clearly says the actual date of invoice or last date when invoice is ought to have been issued, whichever is earlier. So it is very, very important for us to know when invoice is ought to have been issued. That's why we discussed all these points. Are we clear? Everybody? Please take it, come on. Friends, finish writing? Yeah? So what is 12.2, sir? General rule for time of supply in case of goods. What is the answer? Date of invoice. And date of invoice meaning is what? The actual date of invoice or last date when invoice is ought to have been issued. Whichever is. And when invoice is ought to be given is given by section 31, which says movement of goods, date of removal. No movement of goods, date of delivery or make available. Continuous supply, statement is issued or payment is received. Goods sent on approval basis when it is approved or 6 months from date of removal. Clear, no? Speak out. I'll ask you one question. Tell me the answer. Sir, Mr. X is a dealer in chairs. Okay? One person, Mr. P, he ordered 10 chairs. Ordered when, sir? 10. He has sent the 10 chairs on 10th February 22. And X gave invoice on 12th February 22. P made payment on 15th February 22. Okay, na sir? What is time of supply? Speak out. 12 February 22. Nonsense answer. 10th February 22. So you have to recall the concept I taught you so much. Date of invoice means what? Actual date of invoice. What is actual date of invoice? 12th Feb. Or last date when invoices ought to have been issued. These chairs only, no? There is a movement of goods, right? When movement of goods is there, invoices be issued when? On or before the date of removal. When removal is there? 10th February. So invoices ought to have been given on 10th February. 12th February or 10th February, whichever is earlier. What is the answer then? Then, please guys, in exam don't do a mistake. Every mistake is very costly. Every mark will make a whole difference in life. Please, 6 months is not a joke. It sounds very funny for us to tell June becomes December, December becomes June. It's easy to tell. But 6 months, the pain of that 6 months, only the person who is wasting time will know that. 6 months is not a small time. It's a very, very important time in life. And the time once lost, it will not come back at any point of time. So please, don't effort to do any small mistake. After knowing the concept. If you don't know, nobody can do anything, but after knowing, don't do mistake. Are we clear? Take it. Sir, done? Speak out, friends. Then that's all for today about section 12.1 and 12.2. We still have some more points, 12.3, 4, 5, 6. That also will complete in next class. And next class we will also solve some problems on time of supply. And don't do a small mistake. Every mistake is very costly. And every mark will make a whole difference. Please don't effort to do that. Any sort of silly mistake. Thank you so much. Your material is getting ready. I'll give it very soon. Maximum 1-2 days. Thank you.